Joining us for a look at the day's markets action is Graeme Franck from PSG Wealth Sandton Grayston. Thank you so much for your time, Graeme. I feel like we've been getting a mixed picture when it comes to the U.S. labor market because we had those job openings on Tuesday, and then yesterday we had the ADP private payrolls for November, basically suggesting a cooling down of the labor market as they fell more than expected. But today we had weekly jobless claims coming out with, the number of unemployed people claiming for unemployment compensation falling, and I'm wondering if this is kind of providing confusion on that labor market, or are the markets still set on that US labor market actually cooling?
Yeah, I think the markets are starting to say that. Obviously, labor markets and the tightness thereof is linked to the general economy and in turn is linked to interest rates. And if we look at the US 10-year yield, it peaked at just over 5%, nearly 5.1% just a couple of months ago. And it's last time I checked, it was 4.2, 4.25. So it's come down quite a lot as the market does expect interest rates to fall as early maybe as the end of Q1 next year into Q2.
Yeah, I'm actually wondering, Graeme, are investors actually looking to the upcoming Fed meeting that is next week, or have they looked past that, where they kind of said that the Fed will not be changing interest rates, they'll be keeping them steady, where they're now looking past and kind of trying to decide when the cuts will be at this point?
Yeah, 100%. I think next week's decision is going to be a non-event. Then obviously everyone's off on holidays, and as I say, the markets are now starting to price end of Q1 being the potential for the first 25 basis points, so 0.25% cut in the US, and that'll obviously spur the rest of the world on. I mean, I see Germany came out with poor industrial output today, so I think the world markets are looking for rates to come down now.
Graeme, while we're still in the US, I understand that there have been some developments on Alphabet on the AI front, where we are seeing a climb in those stocks.
Yeah, I just looked just before we came on air. I was looking at Google's, Alphabet, which is the parent company. The shares were up 6 or 7% when I looked, and it looks like they have just launched their AI artificial intelligence model called Gemini. So obviously NVIDIA has done it, Microsoft has done it. Now Alphabet, Google are following suit, and the market's really taking that news well, and it's obviously spurring the broader NASDAQ index up at the moment.
Yeah. I mean, this AI boom that we're seeing now, Graeme, do you think that it's the start of it? Because, I mean, they have run quite a lot, these stocks, this year. But even with that bullishness, do you think that it's only the beginning and that there's still much more upside, of course, as we continue to see these developments on that front?
Yeah, well, definitely there's a lot of upside from the earnings perspective. Obviously, whether the share price has discounted all these growth in earnings, that's the big question. So if we look at NVIDIA, for example, the shares have virtually tripled this year. They touched a high of $510 and they're back to about $440, $450. So, jumping around quite a lot at the moment as AI announcements come out and as quarterly earnings come out. But to answer your question, I think that the tailwinds for AI and these big technology shares are still quite strong.
All right. Well, let's come back home. There was a consumer confidence print that came out. And of course, this is quite an interesting one as we are in the festive season. So we're going to be seeing if consumers will be flocking to retailers during this time. What can you say about that, Graeme?
Yeah, it was a very weak print, to be honest with you. It came out at -17. That's the lowest festive season print in 20 years. So just to give you an example, in more recent history, when we were in the peak of the December COVID in 2020, that was -12. So -17 is pretty poor. I know you're going to be speaking to Annabelle Bishop later. Maybe good to get her perspective on that. But I mean, even just PSG and PSG Sandton, in the hub of Sandton, we've had internet going down because of load shedding, traffic. So you take that and extrapolate it across the country. I think the consumer confidence is very poor. And that's also why you saw banks were so weak today. People need confidence in order to borrow from banks, in order to get their loan growth and their earnings up. So it had quite a big impact, that bad confidence figure on the market today.
Yeah, and of course, as we're talking about the consumer, Spur came out to say that the 60% acquisition of the Doppio Group has been now fully implemented. And of course, there the company is expanding expanding. They now even kind of got a new sub-brand of pizza vino Sicchio, or we need an Italian here, Graeme, to say the, the proper pronunciation. But we did see that share price climbing 2%. Just looking at the fundamentals of this company, would you say that they are still solid, considering the low consumer confidence that we have?
Yeah, I mean, that's a great question. And in fact, the very reason that Spur has said that they've bought Doppio Zero is because over 70% of their trade, of Spur's trade, is in the evening, and load shedding and confidence is affecting their trade. Doppio Zero, more than 70% of their trade is during the day. So they're really trying to balance it out. And I think it's small, it's less than 5% of their market capitalization.
Yeah.
But strategically, I think quite a good acquisition for Spur.
All right. Well, Graeme, let's get to your stock pick for today. What will it be?
So I'm going to go for boring old British American Tobacco. I mean, when I say boring, they came out with a poor trading update yesterday. Shares dropped to 9 or 10%. And on that sort of basis, it's on a PE of, 6 or 7 times, dividend yield of about 10%. And, dividend yield of 10% when you're only paying a 20% tax rather than full income tax on interest is starting to look quite attractive. And lastly, British American Tobacco hasn't kept track with Philip Morris and Altria in the US, so it's lagged its international peers and looking attractive at these levels.
All right. Well, thank you so much for your time and for your insights on what has been driving the markets today, Graeme. That was Graeme Franck from PSG Wealth Sandton Grayston.